Hey guys, this is Jay and welcome to another episode. If you can master and spot liquidity early, you will be able to enter the trade right before smart money does and take advantage of those big moves in the markets. The understanding of liquidity will definitely help you avoid unnecessary losses and also increase your win rates. So, what exactly is liquidity? Most trading gurus and mentors try to make this liquidity concept seem like something so hard and difficult or complex to understand. But I promise you that by the end of this lesson, you will be able to fully understand what liquidity is and how to spot liquidity correctly on the chart. So guys, if that's something you are interested in, kindly show your support by smashing the like button and also subscribe to this channel if you are new. Don't forget to turn on the notification bell for subsequent updates or subsequent advanced trading videos. Stay tuned. Welcome back. Let's head straight to the point in order to make this video as short as possible. So what exactly is liquidity? I don't like to complicate my stuff. I am more of a technical analyst, and I'm going to give technical examples of what liquidity is and how to spot liquidity correctly on the chart. So to me, liquidity simply means money. The market needs liquidity to make those big moves. It is liquidity that fuels the market. So as a trader, you have to understand that the concept of liquidity is very important. You have to learn how to spot the liquidity ahead of time so that you don't become the liquidity. There's this popular saying that if you can't see the liquidity, then be ready to be liquidated. So to me, liquidity simply means money. You have to identify where the money is in order for you not to become the money. Because if you don't know where the money is, I promise that your money will be taken and you will now see the move going in your direction after you have been stopped out. So in order to avoid that, please pay maximum attention to this video. This is the real concept of liquidity. Shun every other thing you've heard about liquidity. As we progress in this video, you'll get a proper understanding. So liquidity means money, and we have only 3 types of liquidity, which is one, we are going to be talking about the first one, transactional liquidity. We have structural liquidity, and then we have inducement liquidity. I promise this video or this lesson is not going to be too long. If I notice that it's getting too long, I'll cut it short and probably divide the videos in parts. We have part 1 and then we have part 2. Like I said, we have 3 types of liquidity: transactional liquidity, structural liquidity, and inducement liquidity. Transactional liquidity is simply used for corrections, while structural liquidity, which is one of the most important liquidities so far, is used for continuations, and inducement liquidity is used for expansion. Now let's take transactional liquidity. Let me illustrate transactional liquidity, which is used for corrections. Now before I talk about transactional liquidity, those days while we were coming up or learning how to trade, we were told that anywhere we see something like this, they call it equal low, we should expect that price is definitely going to come and take out this equal low. We should expect that price will come take out the equal low. Should expect that price will come take out the equal low, and Of course, when we have equal highs rather, same thing is applicable. We expect, sorry, this is not equal enough. We expect that price comes to take out this equal high. We expect that price comes, take out the equal high like this. And then there is another story we used to hear about trendline liquidity. When you have a trending market, we expect that price will come to sweep all this liquidity that then I used to hear there's liquidity here, there's liquidity here, there's liquidity here, and of course we expect price to come sweep this. We expect price to come sweep all the liquidities here, which is not completely or logically out of place, but this concept I want to explain is very simple. I have demystified the concept of liquidity. Okay, because when you say anywhere you see double bottom or equal lows, expect that liquidity will come sweep it, and everywhere you see equal highs, expect that it will be swept, and this and all of that. So how do you identify the actual spot, like where the liquidity really is? Now, no need for long stories. Let's take all of this out. Alright, let's make the very long story short by treating what transactional liquidity is. You should have understood what a swing structure is by now. If you don't have a proper understanding of what a swing structure is, please kindly go back to my previous videos to grasp what swing structure is. Now, I told you that for every swing structure, for the buy model, you should have a sweep of this low, okay, now and then a break of the recent high, which is your BOS, which is known as the break of structure. Now, this break of structure simply signifies that the trend is bullish. This break of structure is what is known as transactional liquidity, or the TLQ in short form, the TLQ. This break of structure is what is known as transactional liquidity. So when you see a swing structure, we expect that this low is protected, right? And then this is the swing high. Now, transactional liquidity, as it is stated here, is used for correction. So anytime price takes out transactional liquidity, we expect the market to correct itself into the discount zone of that swing structure. We are expecting a correction back into the discount zone of the swing structure whenever price takes out transactional liquidity. Okay, because if you take your fib tool to plot from the swing low to the swing high, you can see that price is already in the discount area. Excuse me. So whenever price takes out a transactional liquidity, you should always expect a correction, no matter how far the price goes. No matter how far price goes, it will definitely correct itself or retrace back to fill up area of values before continuing to the uptrend, before continuing its trend rather. price must definitely correct itself before continuing its trend. Okay, now we might have seen something like this. We might have seen something like this. Even when we have something like this, and then another break of structure, this break of structure is known as transactional liquidity, because a new high was created and then was broken. You can see that price retraced back into this area. To create a new high, which is known as transactional liquidity. Meanwhile, this area is protected. This area is supposed to be your protected low. Okay, I just hope I am communicating. This is all about transactional liquidity. Whenever you see a break of structure to the upside or to the downside, always expect a retracement back into the discount area of that swing structure and expect a continuation. Okay, but definitely when we talk about structural liquidity, I will explain why this low will be taken before continuing to the upside. Now that is for the buy model, which is also applicable to the sell model. Now, when there is a break of structure, of course, your swing structure, this is the sweep of the previous high, and then we have the protected high, which is your invalidated zone, and this is your transactional liquidity has been taken. So when this transactional liquidity has been taken, what should we be expecting? We should be expecting a retracement into the premium area of this swing structure, which is this area. Should be expecting a retracement into the premium area, and then when price gets to the premium area and mitigates an area of value, price will continue to the downside. So this is everything about transactional liquidity. So it is safe to say when price takes out transactional liquidity, you can actually look for buy opportunities into that premium area. You can actually buy until price gets to the premium area, and then before price sells off from the premium area. So it's as simple as ABC. Let's head to the chart and take some examples. Okay, this is one of the opportunities I had on GBP JPY a couple of weeks ago. Now, can we see that this is our swing structure? Okay, and this is the sweep of the previous low, and this is the break of the recent high. And what did I say about transactional liquidity? This BOS, this break of structure to the upside, simply tells you that transactional liquidity has been taken, and therefore you have to expect price to correct itself back into the discount area of that swing structure. How do you know the discount area of the swing structure? This is the entire swing structure. This is the entire swing structure. So this is the discount area. But when we talk about transactional liquidity, I will show you another form of calculating or getting the right discount area to buy from. So this is everything you need to know about transactional liquidity. Whenever price breaks structure to the upside or price breaks structure to the downside, just know that transactional liquidity has been taken. So let me see if I can get other examples. Okay, well, let's continue. We'll get, I will explain more as we progress in this video. So that's everything about transactional liquidity. It is simply used for corrections. Now, the second type of liquidity is structural liquidity, which is very important for every trader to understand. You need to understand structural liquidity, and structural liquidity is used for continuations. Structural liquidity is used for continuation. Let me give us a template here. Structural liquidity is used for continuation. This is our swing structure. Okay, our swing structure, and then that's the sweep of the previous low, and then we have something like this to the upside, and now we have a sweep of this low, rather, yes, a sweep of this low, and we have a break of this high. This break of structure is the transactional liquidity that has been taken, and there is another transactional liquidity here that was taken, and of course we expect this low to be protected, and this is our swing high. So this is a clear indication that the market is bullish. Now, transactional liquidity is used for continuation. Now, transactional liquidity simply means the last low for a buy model. It is the last low before the protected low. Then for a sell model, it is the last high before the protected high. For a sell model, you should have something like this. So this is the sweep of this high, sweep of this high, and then we have the break of this low, which is transactional liquidity that has been taken. Okay, and we have another transactional liquidity taken. So what are we expecting price to do? We are expecting price to retrace or correct itself back. Price should correct itself back into the premium area of this zone by taking out this last low, the last high, by taking out the last high, of this swing structure before price will continue to the downside, before price will sell off from the premium area. Meanwhile, we expect this low, this high to be protected, and we expect this low to be taken. This low becomes our target. Now, I'm going to show us some examples on the chart. So this is just few things you need to know about structural liquidity. Now let's take some examples on CHF JPY. This is a key level, a higher time frame POI. So I had so many opportunities here some weeks ago. Okay, already we can see that this POI has been mitigated, so we have some kind of confidence to actually take our trades from this area, especially when we get the right entry model. Now I'm going to cut price. This video is becoming too long, but let me just illustrate this example. We can see a sweep of this entire low. First of all, you have to spot your swing structure. Okay, look at my swing structure here, my sweep, and then we can see the structural liquidity, and price has taken transactional liquidity. Now this is my swing structure. Transactional liquidity, which is the same as a break of structure, has been shown to us. Therefore, we expect this low to be protected, and this high becomes our target, right? Now, this is the last low. This is the last low before this protected low. This last low is your structural liquidity, while this BOS or break of structure is your transactional liquidity. So we'll simply look for an area of value from this, probably look for a QMR, which you can see that price actually mitigated and continued to the upside, because structural liquidity rather is used for continuation. This concept is very, very simple. You don't need to complicate it for yourself. Okay, you have to understand that in all of this retracement, this is the only and the last low before this protected low. So all you have to do is to take your fib tool, plot from the protected low to the recent break of structure your transactional liquidity, just to understand the right area or the right zone to buy from, even inside the discount area. Okay, in my next video, after I finish everything about liquidity, I'm going to do a video on POI. Okay, how to validate POIs, or how to spot valid POIs and use them correctly. Now that is that for this example. Let me wipe here off. We can see that there are still other. Now this low is protected. Okay, now we can see another swing structure, which is, this is the sweep. That was your previous structural liquidity that was taken. This is a new low that is supposed to be protected. This is a new transactional liquidity, a break of structure, signaling that this trend will still continue to the upside. And then we have our last low before this protected low, which is our structural liquidity. And when we take our position to look for a valid POI around this area, look for a valid POI that's probably not been mitigated, take your position tool, then your stop loss will slightly be below the invalidation area. And as for me, when I get my 1, 2, 3, I am okay. And we can see what price did, right? Just look at what price did. Price went straight up. Okay, now when we clear this whole stuff, this low is okay. Let me leave the protected lows. This is the first protected low. This is second protected low. Now this is a new swing structure. If we look at it properly, this low is supposed to be protected. This is our previous structural liquidity, which is supposed to be which was swept by this low. Okay, and then we have a new transactional liquidity. Look at it. There was a break here. Yes, we have a new transactional liquidity, and of course we have our last low, which is our structural liquidity. And what happened? Price looked for an area of value here. Let's look at this week based QMR. You can see price came down. All you need to do is to take your position tool and then your stop loss slightly below this protected low, and you target this high, or you do 1 to 3 just like I always do. 1 to 3 is the max and I take, and 1 to 2 RR is the lowest I go. I believe in progress and consistency. I'm not greedy. All I just want is profit and to also protect my capital. So we can see that we have about 3 opportunities in this move. So if you are smart enough to be able to go back to your homework, like do your homework rather, do enough back testing to be able to identify these patterns, I bet it will make you profitable and it will also increase your confidence. Let's look at another example before I end the video. Now I think I have something on. Let me look for a sell model. This is very simple. USD JPY. Though I didn't take this USD JPY trade because from the higher time frame key level, this sale happened in the discount area, and I'm not supposed to sell from discount area when we are looking at it from a higher time frame key level. Okay, now we can see this. First of all, you have to map out your swing structure, okay, which is this. You can see the sweep and this first break of structure. Look at price 2K off, first break of structure, and then we have this leg. This is the last low, okay, which is our structural liquidity. That's the second pattern. I explained it. Just go back to my previous videos on market structure and ultimate forex trading strategy. You understand everything about the swing structure and how I explained probably incomplete pullbacks, and which is more or less like the structural liquidity. And then we have another break of structure. Break of structure, you can actually term your break of structure as transactional liquidity. Now this is our complete swing structure, right? This is our complete swing structure here, okay? And we want to always take our sell entries, especially for a sell model, around the premium area. Then for a buy model, we want to buy from the discount area. Now this is transactional liquidity being taken here, which is your BOS. We have another transactional liquidity being taken here. And when transactional liquidity is taken, what should we be expecting? We should be expecting a retracement. Now this high is our protected high, okay? This is the last high before the protected high, which is our structural liquidity, okay? And of course this is our week low, which is our target. Now what we have to do is to look for an area of value here, and you see this, you can see this QMR, you can see the QMR, right? Okay, now we don't have any trade. Now we don't have to take any trade around this area, because mere looking at your swing structure, you already can see that this high, which is the last high before this main high, will be taken away as your structural liquidity. So you can see how price started retracing after taking transactional liquidity. Price was retracing, and some people might actually get trapped around here, thinking that this place is a protected high and probably want to take all their orders from this from this zone and see what price did. Price took it off and shifted here. There was a shift of market structure here, and we can see what price did. Price went back up, mitigated an area of value, and sold to the downside. So guys, this is very simple, but Rome was not built in a day. You don't expect to understand it by just watching this video. Just watch the video over and over again and go back to your drawing board, but do enough back testing, and I'm pretty sure you will understand the concept. So in my next video, I'm going to be treating the other type of liquidity, which is the inducement liquidity. It is very important for you to understand inducement liquidity. When there is no structural liquidity in your swing structure, you should expect your protected area to be taken, and that will give you the inducement liquidity that will now create a new expansion. So I'm going to be illustrating all of this in my next video. So if you have gained value so far, kindly hit the like button and subscribe to this channel if you are new. Don't forget to turn on your notification bell just to get updated whenever I drop subsequent trading videos. Now, there are no stupid questions. Drop your questions, drop your comments in the comment section, and I'll be right there to answer any questions you might throw at me, and anything you want to know as it regards liquidity. Okay, so see you guys in my next video when I'll be teaching on inducement liquidity.